traders at Access Bank say that they expect the Treasury bills market to close the week bullish on the back of liquidity driven by FAAC inflows. Meanwhile, the Debt Management Office will offer 300 billion naira in its May 2025 federal government bond auction scheduled for Monday next week. Odinaka Linus-Nwokonkwo, the Treasury Team Member at Access Bank, joins me now for Market Focus. And thank you so much for your time today, Odinaka. But let's first start with how investors have positioned this week and how are they gearing up for the bond auction on Monday.
So on Monday, the DMO will be offering a bond auction across two maturities, 2029 and the 33s. What is on offer is around 250 billion. So investors is a bit quiet. Remember that is a sukuk happening today. So all attention is being focused around the sukuk today, happening today, the debit. So on Monday, we would see what the appetite looks like. But there's looking like more strong appetite for the sukuk as opposed to the natural bond auction.
Because we're also seeing that the bond auctions more or less have been subdued with average yields unchanged. You know, what does this signal about sentiment going forward?
Yeah, so the DMO is looking at the cost of borrowing across board. The two auctions have closed around the 19.99 on the 2033s, and we still expect the closing for on Monday to also hover around that rate. Most investors are now willing to sell above the 20% handle, considering the borrowing stance of the CBN. So secondary market today is still trading around the 19.90 to 19.95 levels on that instrument.
Yeah, because I'm also noticing that there's some activity around the interest around the 2023 maturity, which is around the 19.3% handle. You know, what makes this particular tenor attractive?
So the 2033 bond is like the longest tenor on the run bond. So most activity will be centered there. Also, if you look at the bond calendar for June, it's going to be exiting the calendar. So that may also spur a bit of activity post-auction. So we still expect it to be around the 19% handle, nothing above the 20%.
All right, I'd like to shift to the fixed income market, the T-bill space more or less, and see what's playing out there, especially with that drop in yields. What does that say about the current demand and supply dynamics?
Yeah, can you repeat the question a bit?
On the T-bill space, following the lower stop rates at the primary auction, what does it say about the current demand and demand dynamics playing out there?
So we've been seeing massive demand for the NTB in the NTB space. Last auction was in excess of 1 trillion. What was sold was around 650 billion. And you can see the rates dropping slightly by about 7 bips from 1963 to 1956. So that tells you the massive appetite from investors, local and banks for the NTB, especially when you look at that. When you look at the option of reinvesting, the local guys, the PFAs and asset managers cannot access OMO papers. So for any short-term maturity, you are left with NTB. So we've seen that massive subscription levels.
Interesting times there, because when you look at what we're seeing play out in terms of liquidity, what's your outlook in the near term and your assessment of the rest of the second quarter?
So at least for the last 2 weeks, market has been a bit liquid. We've not seen market enter into deep repos that we usually see. We see SDF, market hovering around the SDF, which is the OBB and overnight rates, around the 26.5 levels. So next, we're expecting FAAC next week, and also there's a sukuk debit going to happen, and also the bond auction debit. So I expect just a net, will I say, no net inflow in the market. When you look at what will happen next week in terms of liquidity inflow.
But in terms of your FX outlook, how are investors positioning then?
Can you repeat that, please?
In terms of your FX outlook, you know, how are investors, our sentiments are leaning for investors there?
Oh yeah, generally in the FX, right? You've seen appreciation. Yesterday there was a bit of supply. Markets was around 1582 yesterday. MFM VWAP closed around 1584.95. So we've seen a bit of improved supply from offshore investors, especially on the back of the OMO that the CBN kind of floated, where they almost sold about 655 billion on Monday.
All right, now, but looking at the yield direction over the next 2 weeks or for the rest of June, or let me say, as we go into June, what would you say in terms of how investors are positioned, and what are your expectations?
So when you look at the yield curve, especially on the short end, which is the NTB, is a bit inverted. The shorter end is trading around the 26% discount, while the long end is around the 21% discount. So on the discount basis, we have an inverted yield curve. Also, when you look at the bond space, the long end bonds are around 17% handle, while the shorter end bonds are around 19%. On the direction of interest rates, investors are kind of a bit flat on that. There is no active position taking, especially considering that the policymakers, which is the DMO, is not moving on rates. They've capped rate at least 19.99 on the 2 auctions. So there's no really clear visibility on interest rate direction, especially on the long end instrument. But on the shorter end NTB, if we continue to see this massive subscription levels, then interest rate is expected to decline. Also, because the CBN did not offer long-end OMO in the last OMO auction, we've seen a massive decline in rates on the long-end OMO. Today it's trading around the 21.2 levels, while on the medium to short end, we have it at around 23%. On the discount levels. So the detection or the direction of interest rates will depend on what the policymakers does over the next couple of months.
All right, thank you so much for your time on the show today. Odinaka Linus-Nwokonkwo, the Treasury Team Member at Access Bank.